Hey my friend, it's Will here over at Pips and Gains, and welcome to the introduction into price action and how I trade the FX markets. Now I take a very basic, simple approach to trading, and in the next 3 or 4 videos I'm going to break it down into actually how to build simple method to trade the market and understand the markets, because the best strategies and the best way that I've found over my 14 years as a Forex trader is to keep trading as simple as possible. Okay, and if you do read a lot of stories about successful traders, some of the most successful traders ever, they've all had a very simplistic approach to trading the market. So before we actually get into today's video, we're going to look at how to identify key trading zones. If you are new to the channel and you want to stay up to date with all my latest videos and the remaining videos in this short beginner's introduction course, simply hit the subscribe button, hit the thumbs up, and let's get into the video. So charts we're going to use today is over on TradingView, and I'm just going to pull them up here. Okay, so we're just going to, first off, the first thing we want to look at is how to identify proper trading areas where there is likely to be reaction in the market, smart money reaction, institutional reaction. And to do that, we have to look at the higher time frames. So this video is going to show you how to identify these kind of areas on the higher time frames. Basically, you could call them supply and demand zones, buy and sell zones, support and resistance. Basically, all it is where is smart money likely to be entering and looking to exit the market, where they're likely going to be targeting. And this video hopefully will give you an understanding of that. So I'm just going to hide my indicator. I'm just going to hide all the drawings. This was, I think, the previous video I done on this. So first thing we want to look at is the monthly charts. The monthly charts. So what we want to look at is where price currently is and what it is actually doing currently on the monthly charts. And as we can see, and you can basically use this for all time frames. So just use these steps for all time frames you're trading. If you're trading lower time frames, you can use the exact same methodology as what I'm using here. It's a lot easier to see what's happening on the higher time frames. It's a lot easier to teach the higher time frames and learn just exactly what's happening. So as we can see on the charts here, quite clearly, price is trending down. So what we want to look at here is where it is likely targeting. Price is likely targeting for a retracement, and where would be a good area to get back in on the move down. So first off, we want to look left, okay, and down. Okay, for the targets, we want to look left and down. So if we look left and down, we can see first off here, we've had a huge reaction at this price level before. This is from, I think, on this pair 2015, the DPEG. We've had a huge reaction there before. So this is likely to gain traction again. So we want to mark that first. Next is down here. Okay. And obviously we want to mark this, the low of that box too. We want to call them, so we can call these support. So you can see this area here on the charts. Normally you would go from the close of the candle down to the bottom of the wick, but this is a huge candle with a huge wick. So you just want to draw from the bottom, the open of the candle down to the wick. You just really want to draw this huge wick, and that'll give you the zone. Now, next thing we want to do is, if we're just trading the monthly charts, we want to look up and to see what's actually just happened and if there is any newly created trading zones. So I'm going to show you how to identify newly created trading zones. So first off, if we look up, we have this previous support should now act as some resistance, and should act as an area where we could possibly get back into the market to sell this asset for dropping back down. Okay, so this would be a good area to get into the market. Now, next we want to see if there is any supply sale zones, supply zone. Okay, and we do this by identifying what has happened and what pause in the market has achieved. So if we zoom in here, so we're tracking this leg down, and we can see as it's tracking down, okay, it's creating new lows. Then we have the pause, the swing high, then it starts to move down again, the new low, then the pause, and then the new low. So what we want to do is start of the origin of the move that created the new low, the swing high, which is this area here. Just pick that red. Again, this is the origin of this move. The origin. Sorry, my Irish accents sometimes find it hard to say some words. Don't worry, I'm working on it. So this is the origin of this move. See, we had the pause, then the drop, the new took out this support. Now resistance, now should act as some resistance if this will be confirmed if we get the close under this level, because we could just shoot back up here this month, but this just, we could say in hindsight, this is closed under this zone, created a new low. This is a newly created supply sell zone. So we could see the market, this would be a good area for the market to come back up to. Normally when we are in a strong move down, the market will come back up to the low, the last low it's just taken out. Okay, we can see this as it's moving down. Okay, just zoom in here. If we look, just looking at this, we're just looking at this leg down here. If we look at this leg down, we can say if we just mark these lows, the price is taken out. They had this huge drop here. Okay, there's one low, and there's two lows. So what we can see here, what I mean is, as price starts to move down, the strength of the pullback, they usually pull back to the last low it's just taken out. So we can see here, pulls down, creates a new low, then the swing high comes up and tests the last low that it's just taken out. Okay, and then continues on down, takes out this low, creates a new low, comes back up to these low areas, which are now resistance, previous support, and then drops again. Okay, so this is why, if this is a strong trend, we're likely to get a retracement back up to, instead of coming back up to this supply zone, we would likely either come up to this area here, we'll just take that out, or this low here, which is in around 88. So this would be the sweet spot for sellers to come back in, and we're looking at the higher time frame. So this is kind of the areas that the institutional sellers, institutional traders are looking at. This would be a good area to wait for the market to come back up to, and then sell off down to target this. We could just come straight down here. Market could just break straight down and then come back up to test this and then head down that. So what we've identified here, is good areas to buy. If I was looking to buy this on just based on the monthly charts, I haven't went into any lower time frames, just based on looking on the monthly charts, and as like I said, you can use this. Basically, this video you can adapt this into any time frame, so you can go down to the weekly and do the exact same thing what I've just taught you in this video. So if I was looking to buy this just based on the monthly charts, I would want to be waiting for a drop down to this support level or close to it. My target would be this area here. My second target would be this area. So if I was just solely looking to buy, it would be down here first. Target would be here. And then if I was looking to sell, again, it is after you get this huge drop on the new low. If you can kind of see on these charts, if you can see us anytime the market creates a new low, it usually comes back up. Test the breakout area, and then sells off. So you should be very cautious selling at this kind of candle, on this kind of candle here after the break. The best time to sell is waiting for a pullback and then selling back in on the pullback to target this area here, and then you can back up. Say this was the next low created. If we're just talking here, we could wait for the sell up to here, comes back down, creates a new low, tests the support, comes back up, tests this previous low, now acting as resistance, and then come down. That's the kind of likely path it could take. Now let's complete the drawings. If we zoom, just look at another pair. I would just look at this pair for the time. You can put this in any time frame. If we go into a lower time frame, so if we look at the daily chart here, personally I don't like looking at levels on the. If we look at the weekly, sorry. So have a look at the weekly charts. So we can see this price action a lot clearer on the weekly charts to what's actually occurring on the markets. So if we look over here, again, any time frame, you want to look left, identify what the market is currently doing. Again, we're going down. Next, we want to look left and see where the likely targets are going to be. And we can clearly see here where the market is now, that we are at an area where price has rallied up from before. Just is a long time ago. We'll just put the two lines in here. So we can see the huge reaction from here before on the weekly charts, clearly telling you that there's been institutional buyers here before and they've pushed the market up. Again, we are on the weekly time frames. These are huge institutional candles. If you see these kind of candles on whatever time frame you're looking at, these kind of candles, it's telling you it's institutional, it's large players pushing the market, because small players, even small funds can't push the market, move the market this much. Okay, it's basically telling you that it's large players at work. So I'm just looking at my other charts there, because we are in live trading on Monday here. So we've identified that area. So once you've identified that area, you've now identified you're coming into an area where there's been institutional selling or institutional buying before. You want to be very cautious trading, selling inside, coming into this area. You want to be very cautious selling in this area. Like I said, once you know where the market is targeting, once you know where it's likely heading, and you're coming into an area where there's been a lot of institutional buying before, even if the trend is down, you don't want to be looking to buy in here, because at any time buyers could start coming into the market, pulling the market up, selling, pulling the market up. Okay, this is an area where you're likely to see institutional buying again, no matter what. This is an area you should not be looking to sell into. You should be looking to buy around this. Or if you're looking to buy, should be looking to buy inside this area. Just send a message here. One second. Okay, so once we know that, we've identified we're going down, we've identified where we're likely, where the market is likely targeting, we've identified area, we've looked left, we've seen that there's been, we're coming into an area where there's been institutional buying before, and the market is down, but this should basically raise awareness that there is likely going to be buyers coming in here. And even if you're trading the lower time frames, you can start to adjust your strategy to look for buying opportunities. So once we've identified that, we want to identify if we are looking to buy and the market is down, we want to identify areas for, if we are looking to buy, targets, and areas where price is likely to sell off again if we are in a strong downtrend. So first off, again, the last low, as we talked about a few minutes ago, this should act as some, just delete that, just got the box. This should act as some sort of resistance. The market should most likely, if we are in a strong downtrend, come up to target this area. Next, we want to see the origin of the move that actually caused the break of the trend line, or sorry, the support. So, although we have the swing high here, we have the drop, and then see this pause in the market here, and then the huge sell-off. This is what I would call the origin of the move, origin, whatever you want to, again, that word. So this is what I would mark here also. That's where the kind of the selling pressure started, really, before the drop down. So this could be a good area to sell again also, because 9 times out of 10 the market's not going to pull all the way back up to the top of the swing high. This is what you want to kind of identify, these kind of areas here, the actual origin of the move. This is the origin. We had the pause, then the drop. So this would be a good area for sellers to look to sell again. It offers good risk reward. It is tight. So it is. And this would be a good area. All right. I want to show you a bit of what I showed you on the monthly charts. What we can see here. So we just want to draw our levels on the chart. So this area up here is the origin of this move down here. Then we have the pause at this low. The market comes up, this swing high, then this swing high breaks down to a new low. So we draw that. And just watch how the market reacts, comes back up to these levels. Okay, we had the break. This area here comes back down, swings back up, more or less to test the previous low that it's just taken out on this area. Okay. Now, what we want to look at here, and the market swings back up and then just drops down. This is the pause here that creates the new swing low. And this area takes out these lows. Like I said, when we're in a strong trend, the market is most likely not to come back up, all the way back up to these levels. It's most likely going to target the lows that it's just breaking out of, comes back up, tests low, and then drops back down again. So like I said, you can see it quite clearly here. Okay, it's just like stepping stones on the way down. A strong trend comes back up and tests the low. And other videos, you're going to learn how to zoom into these kind of areas and identify which area the market is targeting by using learning how to identify slowing of momentum. So might not be tomorrow's video, but the next video, you're going to be able to learn how to go into the lower time frames and identify slowing of momentum coming up to these kind of levels. This video is basically should show you how to identify these higher time frame levels, and by doing so, it will prevent you, like I said, prevent you from if you the trend is down, you start selling into an institutional area, or sorry, an area where there's been institutional buying before, so it'll stop you from getting caught out. Also, if you are buying early, you are in a buy trade, and you're able to identify these areas, you can start adding to your positions as you come into these areas. Okay, and start building into a position. Okay, this is when institutions are coming into these levels. You start to see them buying, start to exit their shorts, and you can actually read price action. You can actually see how how the market starts to turn. Okay, what you kind of call this at the bottom of this move is an accumulation period, and up here a distribution. So you'll start in lower time frames. You'll start to see the market moving sideways, and then you get the huge pop. So that is it for how to identify key levels on the higher time frames. This is the introduction into price action. Okay, this video should have shown you how to identify these key levels on the higher time frames. And again, if you are trading the lower time frames, you can use the exact same concepts on the lower time frames. But again, you always have to be, when you're doing this on a lower time frame, you always want to know where you are in the higher time frames, because in case you get caught out, okay, it will increase your profitability. I did do a video previously on this, but this video is a bit more in depth, and I hope it helps. Now, if you want to get access to one of my free indicators for TradingView, the TRFX King, there will be a link in the description area of this video. There will also be links to follow me on TradingView and join my free Telegram group. Just simply head over, join that, where I'll be sharing these kind of tips, tricks, strategies, trade setups, basically all aimed at helping you become a better trader. So that is it. Don't forget to subscribe to the channel, hit the like, comment below, and I'm Will at Pips and Gains, and I shall see you on the next video.